Hey, hello and welcome back to the afternoon session of day three for the Funding and Finance Day of Newcastle Startup Week Online. I'm delighted now to be joined by Jordan Dargue, who's the lead of the Newcastle Angel Hub. Hi, Jordan, how are you doing?
I'm good, Paul. How are you?
Yeah, very good. We had a nice little chat there about the how everything's changed in the last month or so for both of us, and how it's quite some challenges, but also some opportunities as well for businesses who are pivoting or seeking funding or investment for their business.
Yeah.
So, yeah. Right, got some questions here. So, well, first off, if you just want to explain a bit more about the Newcastle Angel Hub and what that is and what your work entails.
Yeah, absolutely. So the Newcastle Angel Hub was launched back in May 2019. It was on the back of the Innovation Super Network, the BIC, North Invest, and Invest Newcastle being successful in securing the Regional Angel Investment Accelerator grant.
Mm-hmm.
And that was a grant initiative that was launched through Innovate UK. So on the back of that, the Regional Accelerator Programme was to help stimulate regional investment and to bring angel investors to the forefront, looking at investors who have previously invested, but also trying to attract new angel investors to support early stage, high growth and companies operating in the northern ecosystem.
Yeah.
So the Angel Hub was launched back in May 2019. And basically what we do is we look to support companies who are looking to raise capital, equity-based investment. Early stage companies or even scaling companies tend to be more in the tech sector, but we will look at companies across any sector at all. We have a network now building just specifically in the Newcastle Angel Hub of up to about 45 investors. We tend to also invite the funds to come along because we think it's a really good collaborative place to meet new investors, to collaborate with investors, and we hold regular events through the pitching events through the Newcastle Angel Hub. So we tend to run pitching events bi-monthly. We tend to have 6 companies pitching, 5-minute pitches, and we basically try to introduce them to our angel networks. The Angel Hub is replicated on the Leeds Angel Hub, which has been formed by North Invest. And I actually work between both North Invest and the Innovation Super Network in bringing this together. And basically, what we tend to do is we'll tend to, a company that will pitch at the Newcastle Angel Hub, we would try to get them to pitch to our Leeds Angel Hub investors as well, so that a company is getting 2 opportunities to pitch across the whole partnership. And in total, between those 2 hubs, we've got around 153 investors, which is fantastic, really.
Yeah, very good. So a bit of background to the program. Why do we need it? And because am I right in saying that the Northeast has less investors, both less angel investors, but also less investment going into businesses than other regions?
Yeah, historically it did. And that's why Innovate UK launched the Regional Angel Investment Accelerator, because they saw that there was a real gap in terms of the number of angel investors and the number of businesses receiving investment in the North. It was actually only 5% of investment was formed through angel investors in the Northeast particularly. So it's a really, really market need to bring more angel investors to the forefront. So what this grant allowed us to do is to accelerate angel investment by providing a 50% grant matched funding. So 50% grant would go in from Innovate UK and 50% from the angel investors. And what that was really there to do was to help de-risk investment propositions for the angels. And also through what we would do with the Angel Hub is we do regular angel education workshops. So what we're trying to do is evolve the existing angels in terms of giving them more opportunities, more quality investment opportunities. But also what we're trying to do is to bring new angels to the forefront and educate those angels on how to become effective angel investors and why to do it. What we're finding is we're getting a really diverse network as well. So we've got experienced angels, which is great because they lead the conversations. And then we've also got like new angel investors and investors who might not want, they might not have scaled and exited a business, but they have a little bit of surplus capital where they can say, right, actually, I do want to invest, or I do want to support the northern economy and our local startups, basically, and early stage companies. So it's again about that inclusivity and bringing those angels into one cohesive network. And that's what the Regional Angel Investment Accelerator is all about, and supporting tech-based companies as well across different sectors.
Yeah, great. Definitely, I think it's well. I've been to one of your events. You invited me along to that, so I can see what it was all about. And the original plan was to run a similar event as part of this day.
It was
on the morning of day 3, but obviously we can't do that. So what I do like is you are coming at it from both sides. So you're creating opportunities for the entrepreneurs and the business owners to get in front of some investors, and you give them some guidance and some mentoring as well, and support on how to pitch, and also how to make themselves more appealing to the investors. So we'll talk about that in a bit. But then you're providing potential deal flow for the investors. And it was a busy room, the one I went to. You had a lot of people, a lot of investors in that room. And then you also give, like you say, a bit of education, or a bit of to the people, the potential investors, the people who maybe high net worth, to have a bit of money, a bit of surplus capital, like you say. Some of them might have only ever put money into property or more traditional kind of bricks and mortar type
stocks and shares and things, like
that. And they've maybe never considered early stage businesses. So do you want to explain a bit more about how that works for both sides, for the business owners, the entrepreneurs, and also for the angel investors, like the new ones? How does that work?
Yeah, so I think particularly for the business owners and the entrepreneurs, what we do is through the Innovation Super Network, there's a number of access to finance funding workshops, and our next event is actually on the 30th of June for any companies who are looking to raise capital and need some support in terms of getting pitch ready, and also their investment pitch decks ready as well, and the documentation needed. So that's an event on the 30th for any northeastern based businesses.
We'll put the link underneath the video to
Brilliant. Perfect. And what we do in those workshops is they're delivered between Simon Green, obviously the chief exec of the Innovation Super Network, Estelle Blanks, who's the executive director, and myself. And what we're doing is we're giving these entrepreneurs really valuable advice in terms of what finance is available in our current landscape, and particularly focusing on the different types of finance, from equity through to debt through to grants. Then what we do is we then have an afternoon session which really focuses on working hand in hand with those entrepreneurs to get them pitch ready. So it's a really collaborative workshop, and we find that the entrepreneurs get a real lot of information and benefit by being a part of a very small group, and we're giving them advice on how to pitch, but also how to form and produce a really good pitch deck that they can take to their investors. Don't just stop there, to be fair, Paul. What we do is obviously we'll work with those entrepreneurs, and then what they'll tend to do is keep in touch with us as they start to form the pitch decks as well. So what they have on delivery in terms of going out to the investors is really good pitch information that is ready to be seen by investors, and a really clear and compelling elevator pitch, so they know how to introduce the company. The initial part that Simon does around obviously what finance is available and how they can access the finance is equally as important, because we have so many different companies coming to us, and we have so many different entrepreneurs who are looking to raise capital, and it's about understanding why there's different types of capital, and understanding what's really important is, is equity right for your business, is grants right for your business, is debt right for your business, and just having that understanding of where to go, because there's a lot of different initiatives. So for all, there's not there needs to be more capital in the Northeast, without doubt. Well, across the whole of the North, there needs to be more initiatives, and there needs to be, more funding coming into the North, particularly to support these entrepreneurs. But what we've got, we have to make use of. And what we're here to do as the Innovation Super Network is to try and direct companies to the right sources of finance. So the funding workshops have been extremely popular, and And then what we tend to do is we'll try and help the companies who are really, they're really key and ready for investment. We'll take them back through our Angel Hub so that we'll get them to pitch to our investors as well.
Yeah, cool. Okay.
And then on the investor side, obviously, what we tend to do is the way that we build our angel network up is through really good relationships, basically, and having a really good understanding of what our investors are looking for. What we also want to do is give our investors good portfolio diversification. So that's why, Newcastle Startup Week for us is fantastic, because what you're doing, Paul, through these events is drawing out really good early stage, opportunities that could be really, really novel and niche and serving a huge market problem. And then also, in addition, you're then also getting the companies who are ready to scale to start and think about their investment as well. And if we can get a real good mix of companies and keep that ecosystem going and keep companies focused on raising money and growing and scaling, that is what makes our ecosystem successful.
Yeah.
And so from an angel perspective, genuinely angels want to invest because they want to not just put capital in, but they want to support and they want to support the local ecosystem. And that's how the two are starting to come together.
For anyone that doesn't know, do you want to explain what an angel investor is?
Absolutely.
Who are these people? Like, what do they go around with a sign over the head saying they're an angel investor?
And they've got wings.
Who are they? What typically are they looking for, and what makes them different to a VC, a venture capitalist?
Yeah. Okay. So angel investors are typically renowned for being people who have grown, scaled, and exited their own businesses. So successful entrepreneurs in their own right, who are not necessarily looking to start another new business, but actually starting to consider how they can use their skills and experience to support early stage companies. Particularly, angel investors like to invest in companies that are in their location or their hometowns, for example. But historically, because there hasn't always been the quality pipeline and the entrepreneurs, actively seeking investment in the Northeast, in the North particularly, a lot of our angel investors have always gone to London to invest, but that's changing. And it's phenomenal how many local investors we have as part of our Angel Hub who used to invest in London-based companies but are now invested in the North. And I think that's because of the quality of the businesses that are coming through.
Yeah.
So the angel investor themselves, as I say, typically have exited a business. But what we're also starting to see now, it's also people who have really good focus, skills, knowledge and experience, and people who can support early stage companies with that advice, or even just opening doors and network connections for them.
Yeah.
So, and then again, one of the biggest parts is the capital as well. People who have surplus capital, or indeed have capital that they want to invest because they've exited a business and need to invest for tax purposes, basically as well, but also want to do good and want to support that, that entrepreneur.
Yeah.
We have, obviously, angel investors tend to support quite early stage businesses. They tend to be the step between a family and friend investment round and a VC fund round. They aren't afraid to invest in companies who aren't generating revenue. But what you'll find is an angel investor will put a little bit of money into something that isn't generating revenue, but would also maybe put something into that is, so that they're diversifying the portfolio a little bit. The majority of angel investors as well are active investors, so they actively get involved with the company, but you do get a small number of angel investors who still classify themselves as being passive. So what I mean by passive is they'll put the money into your business, but they won't actually sit there and take an active involved role in helping that business scale. They might open some networks for you, but they wouldn't want to be contacted on a daily basis. They wouldn't want to, they might want to see a quarterly board report, for example. So there's two different types, but the majority that's sitting in our Angel Hub are very focused on not only obviously helping support a business with capital, but also helping to support them with advice as well, which is key, particularly with companies that are just starting up or need some additional support, and particularly sole founders as well.
Yeah, great. So that's a really good explanation. I mean, I kind of know, but a lot of people don't. They don't know the difference between angel investors and VCs, venture capitalists. So, but I think definitely the appeal for me of angel investors is that more. It's not just the money. It is they want to lend. They want to get a bit more involved. They want to share their knowledge and expertise, and maybe their network as well. And then maybe a sweetened statement. Maybe they take a bit more of a longer term view of the business. Like maybe some of the VCs might want an exit within a few years. They want you to grow it as fast as possible, sell it, they get their money back as quickly as possible. Whereas an angel might be a bit more patient and that it might take longer. Is that true? Would you say?
Absolutely, it is true. Your VCs tend to come into companies that are starting to probably generate revenue. Some will invest in things that aren't generating revenue. For example, it takes obviously med tech and health tech and life sciences to get to market a little. It takes quite a while. So the VCs, for example, they'll put the money in, but they'll take a less active role in supporting the business. Obviously they'll inject capital, they'll obviously inject experience as well, and generally with a VC, the investment director who's run that deal, or indeed a specific board member who's part of the VC will take an active seat on the board. So they'll still want to have, input and give that company some really good support. But with the angels as well, you'll tend to find that they might not invest as much as what a VC would as well. So what you tend to find with angel investors is they can form a syndicate of investors. So for example, the company could be raising 500,000. You might have 5 angels coming together who put 100,000 in each. And that would obviously be the same value as a VC coming in, for example. What you'll find, as I say, is that the angels tend to maybe put a smaller quantity of cash in, say 100k, to get a company started or to get an MVP built, a minimal viable technology product built, so that they can go out and start and prove some market traction, which will then give the VC enough information to see that the product works and the market is actually available for that company. And to validate the product as well. So, for me, the VCs tend to work a little bit later on, but angels can work alongside the VCs and they can all co-invest together, to be fair. I think VCs stand alone in terms of the quality and the experience that they bring. But for angels, you're going to get that personal day-on contact.
Yeah. I think what you're doing is really important, because you're acting as that bridge between the entrepreneurs and the investors. And in a way, you're kind of doing a bit of a filtering process for them, because they know that you're only going to put in front of them good quality.
Absolutely. I mean, to be honest, in our landscape, as we were saying before as well, Paul, our investment landscape in the Northeast particularly, it's quite small. So the Angel Hub works really closely with some of the bigger funds and smaller funds and different types of investors across the North, because we really want to promote co-investment. And what the VCs and the funds bring, as I say, is just that additional knowledge, the due diligence as well, which again gives angel investors confidence to come into a deal. So we're all about co-investment, and particularly with COVID, as COVID's obviously taken, a hit on the whole economy. It's about us remaining active in our landscape. And from our perspective, angels get real confidence out of working alongside a VC. And investing alongside a VC, and probably particularly more so with COVID, if they think a VC is obviously they've gone through a lot of due diligence and they know the market inside out with the professionals around them, and angels say, well, actually, if you guys are confident with the due diligence that's being carried out, then I'm more inclined to want to make an investment alongside you.
Yeah. Okay. On that is that
Sorry,
me?
Paul.
Is that me? I don't know. So on COVID, like, what's changed? Is it slowed down? Have people stopped making investments, or have you noticed that, like, a lot of people, everyone's just kind of getting used to the new way of working, the new way of living, and now they're looking ahead now, that they're starting to be a bit more active now? Have you seen any of that, do you think?
Yeah, I mean, to be honest, when COVID first started to hit the media and we started to see some of the effects that COVID was having on our economy as a whole, there was a little bit of a unknown to investors, and particularly angel investors. And a lot of them took a decision quite quickly to say, I'm still active, I'm still here, I'm still wanting this to happen. And some took an automatic reaction to say, I want to probably support the companies, my current portfolio, for example, to ensure that them companies don't, fail due to COVID, or become, hit because of COVID. And that was very much the sort of the feeling that we were getting, the discussions that we were having with our angels in the network, that was sort of, some of them would take a bit of a break from angel investing, but some were still quite active. What we've done over the course of COVID is we've actually ran 3 pitch events, which is probably more than what we would normally run, to be fair. Over the course of 2 months, we've done 3, and we've actually got our 4th one coming up on the 16th of June.
Okay.
And what we found is that, our investors, and the majority have said, since all of the whole effect of not knowing what's happened, they've said, actually, we want to continue to invest, and we still want to see quality and deal flow coming through. We also want to ensure that we continue to support the ecosystem, and particularly, obviously, the northern ecosystem. But the focus that they've had on the company has changed slightly. So what they probably are looking at more so now is companies that have adapted to COVID. So companies that have been able to pivot, for example, which we've seen a great number of companies, particularly across the north and the northeast, who have been able to pivot and refine their business or look at new markets because of COVID. And that's now what is piquing the angel investor interests.
Okay.
We all know that the new world, the new norm is going to be different to what we were before COVID hit. And I think for that reason, again, there'll be a different type of business that, that these investors will invest in, and it'll be companies who have been able to get through COVID, and who have been able to, drive forward, launch new products, for example, pivot for certain. But all in all, I'm not seeing a cutback in terms of the investment that's happening. So we've got a number of active deals at the moment in the Angel Hub and with North Invest, and we're getting some great traction. So I think it's about continuing with quality businesses. It's also about ensuring that a company's been robust and being honest to itself to say, this is how we've pivoted because of COVID. And also it's about making sure that we keep the activity going, because I think that's one thing that we need to continue to drive is innovation. We need to obviously continue to drive and obviously support businesses in the ecosystem, because if we start to stop, then we'll start to see that turn. And it seems as if now people are now starting to get used to what the new normal looks like. And hopefully I'd like to think that we've come through probably the worst, but we still feel there's a lot to do in terms of ensuring that there's still the funding needed to support these businesses to get through the end of COVID and drive onwards as well.
Yeah. Because there's a nice comment there. I think you can see there's also someone saying, good to see the positivity and insight around investment and the great stuff that Jordan and the Hub are doing. So yeah,
fantastic.
I think it is. You are doing some great. You were doing some great stuff anyway, but it is really nice to hear that investment deals are still going through and people are still wanting to get behind it as well.
Absolutely.
So what? How do you, apart from coming through you guys, how do you attract the interest of an investor? How do you make your business appealing to them? How do you get on the radar? At what stage should you be getting involved? Because there might be some people who are like, I'm not there yet, or maybe they are, but they just don't realise it. Like, when is the right time to start looking for angel investment and getting in front of them? Can you go too soon? Can you go too soon, do you think?
I don't think you can, to be fair. I think one of the things that I would say is it's got to be right time, right place is probably, what I would say in a nutshell, because I think it's really important to make sure that you've got a really compelling sort of opportunity for investors to start with. So, for example, key things that an angel or particular investor would look for is people to start with, and also to ensure that the product or the business or the service that you're bringing forward is solving a clear market niche.
Mm-hmm.
If you think that your business is doing that and there's a gap in the market and you've done your research, and I think competitor analysis is so important as well when you're obviously looking to take a business out for investment, making sure that you know your market, you know your competitors, and you know your customer as well. They're three really important aspects. And what an angel investor always look at is you as a team, or you as a person who's in that business. So, for example, if you've got the experience in the sector, but you know that you need to bring people in around you to take that business forward, an angel investor isn't going to be put off by that. They're only going to see that as a great opportunity, and that you've realised that as an entrepreneur, you need that additional support.
Yeah.
So again, they'll obviously look at the team, do their due diligence on a team to say, does the team fit the company? And basically, if you can give a compelling proposition around what your business does, and you can explain it clearly, and you've also got a financial model there which can show obviously how your business is going to perform and what your sales targets are, and obviously what your revenue and profits look like, then I don't think it's too soon to start and seek investment. If you're a tech-based company, then investors do want to see an MVP. But again, saying that, some early stage investors will help give you that money to help you perform that MVP. So what they're looking for is true innovation. They're looking for something new. They're looking for something that could, that's going to be a challenger in the market. And if you've got that compelling opportunity, I don't think there's any harm in starting to have a conversation with investors, because you're not going to go out to investors with 100% bomb-proof opportunity for them. There's going to be to and thrown, and then angel investors are so approachable that they'll give you feedback. To be fair, any investor is, if you're a fund or a VC or institution, they'll always come back with some really good feedback. But I think angel investors, they understand that they're going to be seeing opportunities that are really early, so that they can be a bit more flexible. What I would say though is, don't go to an angel investor without having an investment deck or having a financial model, because that's the first thing they're going to ask to see. And that's why the access to finance funding workshops that we do through the Angel Hub and with Innovation Super Network are really key, because that gives you the tools and the knowledge and the know-how about how to go about it and how to approach angels as well.
Yeah. Okay. So the workshops that you do, you said there's going to be one in June, and so it's usually
30th of June. Yeah.
It's like is it a 2-hour workshop normally when it's a typical event?
Yeah, so it used to be a full day before, when we were working when we were in a physical environment, but because it's virtual, it's a 2-hour webinar on the morning, which is hosted by Simon Green, and it talks around obviously what's available in the landscape, and then the next day there's a 2-hour session, so it probably works out about 3 hours now actually, a 3-hour session on working hand in hand with the entrepreneurs, and physically getting them pitch ready and elevator pitch ready. And Estelle will take the morning and I'll take the afternoon, for example. So you can join up for the morning session or indeed the afternoon session. But what we say is it's best doing the session with Simon Green first of all, so you can understand why, and then we'll show you the know-how, if that makes sense.
Yeah, brilliant. So you do, it is, I think that's what a lot of people struggle with is pitch decks as well. I mean, I've never had to pull a pitch deck together. I've done lots of talks and lots of presentations, and I've hosted events, and I don't have a problem with that. But and I've seen lots of pitches. I know what looks like a great pitch deck and what a great pitch is like, but I've never had to do it myself. So there is kind of not a formula, but there is a structure.
A structure. There's absolutely a structure that's in place to make sure that the proposition of the business is shown correctly.
Yeah.
I think it also, when you're actually completing as an entrepreneur, completing a pitch deck for the first time, it actually starts to help you expand your business plan. And new things come out of it. So I think it's a really good exercise to do anyway, even if you're actually not considering raising capital until maybe 2021. Start thinking about it now, because actually when you're going to raise investment, I would always explain to people and advise people to give themselves a minimum of 6 months to raise the capital. And that's actually from going live with your opportunity to completing it. So to start and get investment ready, you're looking at maybe a 9-month period before you go out to raise your capital. But going back to the previous question that you asked, Paul, I think it is quite important to ensure that you do go out at the right time, because I think it's you want to put your company over in the best light.
Yeah. Well, we were having some conversations earlier in the year, but I've told you as well, I was starting to look into getting investment last year. Well, even earlier, but last year seriously, and I had some offers, but it wasn't quite right for what I was. It was either the amount of money was either too small for what I needed to do, or it was very good amount of money but the wrong terms for me, and giving away too much equity and not quite the direction I wanted to take it in. So but it's tempting.
It has to be right.
Yeah, it's tempting when someone offers you some money to just take the money, and but it's the right thing that I didn't take it, and I could spend more time refining what I was trying to do and get more clarity in my own head what I was going to do. So I feel like now is a better time to be speaking to investors.
Absolutely, and there's lots of organisations around, particularly in the Northeast, that can support you with that as well. In terms of even, you might want to, like I say, from an angel investor perspective, they'll give you good advice on terms of how to put your proposition across in the right way. And that's what our Angel Hub's about. It's not just about the capital, it's about ensuring that we're giving the entrepreneurs the right support at the right time as well. And what we found as well, we've had a couple of companies who've come through the Angel Hub who, like yourself, Paul, came through and then felt that they probably actually weren't quite ready, but then they've come back again and they've raised capital. So it is important to make sure that you do it at the right time that's for you as well. But don't be afraid to say, do you know what, I just need to get started, and I'm sure I'll figure my way out as I go through. But making sure that you give yourself plenty of time as well.
Yeah, you get someone else saying how worthwhile the Access to Funding workshop is. Estelle and Jordan taught us so much experience and knowledge to the session, led directly to conversations that resulted in 3 different successful funding streams to help with our current MVP. Well done.
Fantastic. Fantastic. And that's what we want. That's what we want to do as well. One of the things in the Northeast, like I say, the access to finance and the funds being available, there does need to be more funding coming to the Northeast. And I do think that, that is high on the government agenda. We want to see the RIA programme continue with Innovate UK as well, because I think that's had a huge effect on the early stage and investment landscape. And it's key, it's key that, we continue to support these early stage companies in the right way. And we'll always give advice and we'll always try and point people in the right direction. If we feel a company is too early for investment, it doesn't just stop there. As I say, we'll point them to our funding workshops, but we'll also try and point them to other grant providers as well, in the hope that they'll come back to us when they are looking to raise investment.
Yeah, good. From where we're doing it backstage here, it's like an anonymous Facebook user. But I've just gone on my phone and it's Peter Stevenson from Sub 10. So,
yes, I know Peter.
I've got a quick question about crowdfunding, right? Because I remember looking into crowdfunding as a potential way to get equity crowdfunding for the platform that I wanted to develop, right? And I did seriously look into that, but then I did speak to some investors who said, well, we would, because I was like, would you prefer it if someone didn't go down that route? And some said they're not that bothered, like that's good if you can get it, and others were like, would rather not. So some people are really against the crowdfunding route, and some are. What's your take on it, or do you know? Are people bothered or not bothered, or does it work against you, or does it work for you if you've already raised some investment through crowdfunding platform? Do you think?
Yeah, I don't think, from my perspective, I think it's a lot of the angels who I've spoken to and speak to, they still quite promote crowdfunding in a way, because it depends on the type of business, really. I mean, the crowdfunding works extremely well for a company that has a very good brand, and particularly is marketing to consumer brands as well, because crowdfunding will help you with brand awareness. One of the things that angel investors and other investors, I guess, would probably say the same, is with crowdfunding, obviously, you just want to make sure that you've got a really clean cap table. And what I mean by that is obviously really clean in terms of the number of shareholders in your business. So what you want to do is, if you are going down the crowdfunding route, is ensure that that they have a nominee, for example, like a crowdfunding nominee, so that the nominee holds the shares in the business rather than it being 100 people with the £10, because that can become quite unwieldy. Going through the crowdfunding route, you obviously have to find a cornerstone or a lead investor anywhere who has put in a certain percentage of investment before you can put it onto a crowdfunding platform. And for that reason, obviously, it's good to make sure that your lead investor is keen and happy that you go down, if you are going down the crowdfunding route, that they're happy about that, doing it that way. I think it can generate really good results for some businesses, to be honest, and that's why I personally wouldn't be against it as an investor myself, because I think, if I'm supporting a B2C led business, and look how successful some of the leading companies are in the UK, i.e. Brewdog and the likes of, they went down the crowdfunding route, and it has helped them become successful. And personally, I think a lot of investors will probably say the same as myself. To raise investment, you've got to look at all different routes and avenues. And if you can successfully raise using the crowdfunding type platform for early stage, it's going to give you the finance that's needed to help and scale. But then at the next point, perhaps go out to a wider VC who can give you more cash that's needed. Because that's one key area for an entrepreneur to consider, is they're not just going to fundraise once or twice. For a high scale growth business, you're going to need to fundraise a number of times. So making sure that you have in your mind, if you're going down the crowdfunding route, some of those people will get preemption rights to want to invest again. But indeed, it can work in both your favour and obviously the opposite way, to make sure that you can manage all of the shareholders as well, if that makes sense. So all in all, to be fair, Paul, the crowdfunding route, I think, is a good option for a lot of companies who would definitely have a B2C led business. And the investors, the majority of investors that we deal with have no concerns about putting a business onto a crowdfunding platform. And to be honest, there's a company that I'm working with now, and we're talking about the next round of investment after this one, and that is definitely an ideal opportunity for them to get brand exposure.
Well, some people think it's easy, but it's not easy doing crowdfunding. You've got to put a lot of effort into. You've got to really put a lot of thought and effort into a crowdfunding campaign, but it can work really well in your favour. And I know some companies, they've used it more like a marketing tactic. They might already have the product done and they know it's ready to go, but they're using the crowdfunding platform just to build an audience and get a new first customers. Because that's, especially if it's like some people now are using crowdfunding platforms almost like shopping channels, because they want unique or different products or services that they can't get anywhere else, and they like to be the first person to get that. Right? So
absolutely, it can work in the favour for the entrepreneur, to be honest. And I think we've got some really good consumer based startups in the northeast, and I've just had a couple of calls with a couple of them today, to be honest, and I just think they've got phenomenal brands. And if I was going in as an early stage investor, it'd be certainly something I'd be saying, next, as part of this round or your next round, you maybe want to consider crowdfunding, but please be aware that the commitment and the time of doing a crowdfunding campaign is quite intense, so there is a lot of work to do.
And I think if you're not particularly good at marketing, or you don't have an audience already,
it can help.
Really difficult for people if they've just got, they might have an amazing business or an amazing product, but if they don't have any audience and no social media following, they're not very they're not very experienced at marketing or sales or PR or anything like that, then you need to build all that into your campaign.
You do, absolutely. But it's a great way of topping up around. For example, we have a syndicate of angel investors coming into a deal, and there's a few 100,000 more needed, for example. By going onto a crowdfunding platform, it can help close the round quite quickly. And as I say, there's been some amazing successful businesses which have been able to raise through a combination of angel and crowdfunding. And again, it's all about co-investment as well. But one of the things to make sure and to manage as an entrepreneur is that everybody's coming into an investment or into your business as an investor on equal terms as well, because that can become quite unwieldy if they're not.
Yeah. Just been sent a podcast by Ed Molyneux, the CEO of Free Agents. So Free Agents, our headline sponsor.
Yes.
And we're going to share that tomorrow. It's talking about the growth of Free Agent over, I think it's a 15-year-old company business now, but I've seen a presentation given about them, and they've basically had every type of funding you can imagine. They've had friends and family, they've had grants, they've had loans, they've done some crowdfunding, they've had some angel investment, they've got venture capital. Then I think last year RBS bought a 51% stake in the company, and then now it's 100% owned by the bank. So they've literally just been through every type of funding to get to where they are now.
And that's exactly it, Paul, because different types of funding is right for a business at different times, and they'll have started off with friends and family, then probably gone into angel, and then maybe gone into crowdfunding, and then gone into the VC, and then gone into a corporate. And that's exactly how this strategy can work in favor of a company really, really well.
Amazing. Okay, so we'll definitely share some links in the comments underneath here, but where's the best place for people to go if they want to find out about the Newcastle Angel Hub or want to get in touch with you?
Absolutely. So if anybody wants to get in touch with me, they can contact me on my email, which is jordan@supernetwork.org. And if they just want to reach out to me and introduce the company to me, give me a bit of an overview in terms of what you're looking to do, and we can connect that way. They can also go on to the Innovation Super Network website, where they can obviously leave a note as well, a message about looking to raise finance. And we can obviously point them in the direction of the Access to Finance Funding workshops, as well as the Angel Hub as well.
Brilliant. Okay, you're obviously in the Facebook group now, so if anyone wants to ask you a question, they can maybe tag you in, and then and you can respond when you get a moment. All right. Okay, that's great. Thank you very much. Really enjoyed talking to you there.
No, thank you. Thank you very much. Thank you.
I'll end the broadcast. All right. Thank you.
Thanks.